When you're selling your home and you're at the settlement table, you just received the check from the proceeds of the sale of your house. In that moment, do you stop and think, man, I'm so glad the financing of the buyer was X? No, right? As long as the deal closed, you got the proceeds from the sale of the house, the financing doesn't really matter. However, there are inherent risks to different financing types when you're reviewing offers for your home. A lot of times people say that cash is king, that cash will beat any other offer even if that offer is less in purchase price than a conventional offer or a FHA offer or a VA governmental loan type. That's what people say. In this video, I'm going to explain if cash is truly that strong of an offer when you're reviewing it as a seller. I'm making a playlist that gives the education for those looking to sell their home, whether that's next week, next month, a year, or so on and so forth. First things first, when you're accepting a cash offer, it doesn't actually say in the agreement of sale that it is a cash offer. In the state of Pennsylvania, the standard agreement of sale, there's a section that talks about mortgage contingency. Mortgage contingency can either be elected or waived. When you're saying, I'm writing a cash offer, you are waiving the mortgage contingency. The mortgage contingency is a protection for home buyers who need a loan in order to purchase a home. For example, if you were to lose your job while you're under contract to purchase a home, the mortgage contingency protects you when you terminate the purchase agreement for the home. I've had that happen before. It's not fun, you never plan for it, but that's just a way of life sometimes. There are other ways where mortgage contingency comes into play for a termination, but I'll go over that in a little bit. When you are writing a cash offer, you are waiving the mortgage contingency, which inadvertently could mean I'm still getting a mortgage contingency, but I'm not basing it or having that protection of the mortgage contingency to back it up. I mentioned before about losing a job while you're under contract. That is a protected aspect for buyers. There's also if the credit score drops too much while they're under contract, that can cause for terminations because they can no longer get a mortgage because their credit score is too low. That's why you never take out a loan when you're purchasing a home, okay? Like a car loan or financing for an appliance for your new home. Don't do that. Wait until after you purchase the home. There's also a risk of the income being incorrect. Yes, there is a pre-approval that is done prior to writing an offer if there is a mortgage contingency. Once the buyer is under contract, the lender does even further investigation into the income of the buyer to make sure that they can afford the purchase of this home. The income is not stable enough for us to give this mortgage out, and then they will provide a termination of contract because of the lending. That's one of the biggest benefits for a cash deal, is it reduces that risk of a termination. Anytime you're receiving an offer for your home, there is an inherent amount of risk that comes along with the offer. In a video, I'll explain all the inherent risk, but in this video, we're going over the mortgage contingency aspect and how that brings risk to it. Now, a cash deal can still terminate the contract, but it might not come from a protected manner, especially when it comes to the financing of the purchase of the home. A termination of an agreement of sale can happen really at any time. If a buyer does it from an unprotected reason, the seller is liable to financial compensation, whether that's the earnest money deposit, or they can take legal action depending on the agreement that's written up. And when it comes to the mortgage contingency, experts say the second highest cause for terminations for a purchase agreement is because of the financing of the home. So if you have cash, it does reduce the risk of termination quite substantially. Another benefit for a cash offer is that there is no appraisal contingency that's required. When you are purchasing a home with a mortgage, an appraisal is needed. It gives a market value for the home. So if the home's market value in the appraisal report is different from the purchase agreement, that can affect the purchase of the home as well. Another benefit for a cash offer is that cash offers can usually settle faster than mortgages. And the reason for that is because there are these checks and balances in place to make sure from the lending standpoint that this buyer can afford the purchase of this home and the mortgage that comes with it. There are a lot of lenders out there now with new technologies that are able to settle much faster than what they normally could. Before, you were looking at 30 to 45 days is the average for purchasing a home with a mortgage, But there are different options out there where you can settle 2-3 weeks. So it does reduce the strength of a cash offer a little bit because of these new updated ways of purchasing a home. But truthfully, the strength of a cash offer comes from the motivations of a seller. Think about it this way. There are many different reasons why someone would be selling a home. One example is it's an estate sale. Either the owner had passed away or they're no longer capable of being able to sell their home at their own mental accord. So for an estate sale, they don't want to go through inspections. They don't want to have appraisals done. They want the deal to have no contingencies, settle as fast as possible. However, there are sellers who this was their dream home. This was the home they raised their kids in. There's a lot of inherent connection to that home. And from that connection can affect how they view offers. A lot of times cash offers are linked to investors, and a lot of times sellers don't want to give their home to an investor. They want someone to have a similar avenue and experience with their home that they did. I know people that own homes and leave them vacant for years because they don't have the ability to sell them right now because of their inherent connection to the home as the home sits vacant. You may be thinking that's not logical, but that is the way for many sellers out there. There's a third set of sellers, and there's probably more than that, but there's a third set of sellers that only care about what the purchase price and the additional terms are for the home. So if they have a conventional or governmental loan type offer of X price, let's say $450, and we have a cash price of $440, the sellers may not care that the cash offer is less risky. They care that they're going to make $10,000 more from the sale of their home. In conclusion, a cash offer is stronger than other mortgage-based financing options. They use it as a hierarchy when you're a seller. When you're looking at a deal, you want to have a cash deal because of the less inherent risk. Conventional for the same thing because it's not as strict appraisal standpoint wise as a governmental loan type. So they all come from inherent risk of why the hierarchy is in play. Just because it's the best in terms of the hierarchy of risk doesn't mean it is the best option. There are a lot of different terms that come into play with any offer. So it's important that you view the mortgage aspect in one type of way, but you also have important aspects from inspections because there's a lot of different options out there, and also the terms of settlement. Is there a rent back involved? Are they paying transfer taxes? Are they doing things outside of inspections and purchase price in the mortgage type that's beneficial for the seller? For example, some people really need a long time for a settlement date. Maybe a cash deal doesn't want to wait 3 months to purchase a home, but someone with a conventional offer will wait that 3 months. Yes, cash is important, but there's so many other aspects to consider when you're looking at an offer for the purchase of your home. If you like this video, please like and subscribe. I'm going to be dropping more educational videos for sellers and about the whole real estate process in general. I'm sure I'll make a video about interest rates soon because everyone loves talking about them.